Cars are like that one friend who always insists on dining at the fanciest restaurants and ordering the most expensive dishes, leaving your wallet whimpering in the corner. To cope with their costly nature, folks often resort to auto loans as their knight in shining interest rates. However, don't dive into the loan pool blindly. It's crucial to grasp the ins and outs of car loans before you sign your financial future away. We highly encourage you to continue watching this video as it delves into the intricacies of car loan processes and credentials. By doing so, you'll gain valuable insights on how to expertly navigate within the interest terms, empowering you to steer clear of any potential debt pitfalls. So buckle up and stay tuned to equip yourself with essential knowledge to make informed and savvy financial decisions. Our concerns about the future drives us to exercise caution when making financial choices, with the aim of safeguarding and potentially increasing our wealth. Anchored with this in mind, Stealth Wealth Society offers an all-inclusive personal finance course priced at just $97. It's designed to assist you in mastering the art of wealth in stealth mode. However, there's another enticing offer. You can obtain a complimentary copy of our personal finance ebook by accessing the link provided in the description below. These days, the young folks have a knack for valuing things that lose their shine, like those fancy four-wheel contraptions. Oh well, we gotta mind our own bling. But then again, an auto loan's a form of fixed payment loan utilized for buying a vehicle. It constitutes a legally binding contract between the borrower and the lender, wherein the lender agrees to provide the necessary funds for purchasing the car, and in exchange, the borrower commits to repay the complete loan amount plus any applicable interest by a predetermined date. How do car loans work, you ask? A car loan provides a means to make the purchase of a vehicle more financially manageable by dividing the cost into monthly installments over a specific duration. These loans typically range from a few $1,000s to over $100,000 depending on the lender, and come with repayment terms of 24 to 84 months. The amount you can borrow is determined by factors such as the vehicle you choose and your financial circumstances. The payments made on an auto loan are allocated towards both the principal loan amount and the interest charged by the lender. The total interest costs you incur will depend on the interest rate you qualify for, which is often influenced by your credit score. Generally, a higher credit score results in more favorable interest rates. Some lenders also offer reduced rates to borrowers who opt for shorter repayment terms. It's important to note that while you're in the process of repaying your auto loan, the lender holds a lien on your car, granting them the right to repossess the vehicle if you fail to make your payments. During this repayment period, the lender typically retains your car title. However, once you successfully complete the loan repayment, the lender will remove the lien on the car and return the title to you. Get to know these car loan terms. When exploring car loan options, it's useful to familiarize yourself with a few key terms that are commonly used, such as interest rate. The interest rate represents the percentage charged by a lender for providing a loan. It determines the amount you will pay in interest. A lower interest rate means you'll owe less in interest. Typically, to qualify for a favorable interest rate, you'll need good to excellent credit. Some lenders also offer lower rates for shorter repayment terms. Annual percentage rate, APR. The APR encompasses both the interest and any fees associated with the loan. A higher APR indicates a greater overall cost for the loan. When comparing auto loan options from different lenders, it's important to consider their APRs, not just their interest rates, to understand how they compare in terms of total cost. Down payment. The down payment is the initial amount you pay down for a vehicle, which can be in cash, trade-in value, or a combination of both. You can then finance the remaining amount with a car loan. Many auto loan lenders require a down payment of at least 10% of the car's purchase price. It's generally recommended to put down at least 20% for a new car and at least 10% for a used car. While some lenders offer no down payment loans, keep in mind that a higher down payment reduces the amount you need to borrow and the interest you'll be charged. Principal. The principal refers to the amount of money you borrow from the lender and agree to repay. It does not include interest, fees, penalties, or other costs associated with the loan. Monthly payment. The monthly payment is the amount you're required to pay each month towards your auto loan. A portion of the payment goes towards the principal, while the remainder covers the interest. The division of your payment between principal and interest depends on whether your loan charges simple interest, based on the loan balance on the payment due date, or pre-computed interest, calculated at the time of the loan origination based on the borrowed amount. Loan term. The loan term, also known as the repayment term, is the length of time given to repay the loan. Auto loan terms typically range from 24 to 84 months, depending on the lender. Choosing the shortest term you can afford is generally recommended to minimize interest costs. Many lenders offer better interest rates for loans with shorter terms. It's important to note that loan terms can also refer to the details of your loan, including monthly payment, interest rate, and due date. Cosigner. If you face difficulties getting approved for an auto loan, having a cosigner can increase your chances of approval. A cosigner is someone with good credit, such as a parent, relative, or trusted friend, who shares responsibility for the loan. Having a cosigner can also help you secure a lower interest rate. However, it's essential to remember that if you fail to make payments, the cosigner becomes liable for the loan. Total cost. The total cost refers to the overall amount you will pay for the vehicle over the duration of the loan. It includes both the principal amount and the interest accrued. How qualified are you? In order to obtain approval for an auto loan, certain requirements typically need to be met. Good credit. Lenders assess your credit worthiness by reviewing your credit history. Generally, a good to excellent credit score, typically considered to be 670 or higher, is required for approval. While some lenders offer loans for individuals with bad credit, these often come with higher interest rates compared to loans for those with good credit. It's advisable to check your credit before applying to understand where you stand. Websites like annualcreditreport.com allow you to review your credit reports for free. If you discover any errors, you can dispute them with the relevant credit bureau to potentially improve your credit score. Verifiable income. You must demonstrate that you have the means to repay the loan. Typically, you'll need to provide details about your financial situation, primarily focusing on your income. Be prepared to furnish pay stubs or a copy of your tax return as evidence of income. Low debt-to-income ratio. Your debt-to-income (DTI) ratio is the comparison between your monthly debt payments and your income. To secure approval for an auto loan, it's generally preferred to have a DTI ratio no higher than 50%. However, some lenders may require even lower ratios. Where to get a car loan. If you're new to purchasing a vehicle with a loan, it's natural to assume that the dealership handles everything, from providing the vehicle inventory to lending the money. However, while many dealerships offer financing options, it's important to know that you have other alternatives to consider. Direct lenders. These lenders work directly with borrowers and can include online lenders, traditional banks, and credit unions. If approved by a direct lender, you'll receive a check that you can take to the dealership. Direct lenders compete for your business, providing you with an opportunity to shop around and compare your options. This can help you find a favorable deal. Many direct lenders offer pre-approval, enabling you to view personalized rates by providing basic information and agreeing to a soft credit check that won't impact your score. Keep in mind that if you already have an account with a bank or credit union, you might qualify for rate discounts if you also obtain an auto loan from them. Dealership in-house financing. This type of financing is offered directly by the dealership to borrowers, either through the dealership itself or in partnership with specific lenders. If you have bad credit, you may find it easier to qualify for in-house financing compared to obtaining an auto loan from a direct lender. However, the downside of this less stringent approval process is often a higher interest rate. While financing a car through a dealership can be convenient since you can handle everything in one place, it's still worthwhile to shop around and explore other options to potentially find a better deal. It's worth noting that dealerships sometimes offer special deals such as 0% APR or other incentives like cash bonuses or rebates. Qualifying for one of these offers may make accepting in-house financing more attractive, but it's crucial to fully understand the terms and requirements before signing any agreements. It's important to exercise caution when selecting the type of car for which we intend to apply for an auto loan. We should engage in thoughtful deliberation, considering whether we genuinely need the vehicle or if our desire is merely driven by a desire to make a statement. Just as Robert Kiyosaki said, the single most powerful asset we all have is our mind. If it's trained well, it can create enormous wealth in what seems to be an instant. With this, we have to train our mind to not be attracted to things we don't really need. If you need any help with controlling impulsive buying, we have a video about financial minimalism by enumerating the 20 things I stopped buying to save more money in the above pop-up link. Catch you in that video.